Welcome back, members. Now, after our first sessions on the NRI taxation, now we have the another equivalent important topic, which is on the paradigm changes in the LLP provisions. The way the recognitions LLP is getting, whether it is from the bank side or whether it is from the business community side. Even now the practicing chartered accountants and the tax professionals are also advising LLP to the client. And we have observed that there is a drastic changes in the LLP. So enlighten us with the very important changes. We have today with us CS Raj Kapadia sir. He is going to enlighten us on a very important changes. And as a chartered accountant, what are the benefits, what we are going to get out of these today's sessions? So sir is going to help us in that. So now to have the formal introduction, I would like to invite our core group members here, Rahul, Daga sir, to please introduce the today's second speaker, CS Raj Kapadia.
Good morning, everyone. Our today's speaker, CS Raj Kapadia, is a fellow member of the IC Institute of the Company Secretaries of India. He's the founder member of the RK Kapadia and Associates, providing full range of services to its global clients, including representation before various statutory bodies like SEBI, RBI, NCLT, and trademark registry. He's a registered trademark professional under the trademark rules and also provides intellectual property rights services. He's holding a postgraduate diploma in digital business from the Columbia University and MIT Sloan. He's the convener of the Ghatkopar Knowledge Center of the ICSI. He's the co-opted member of the Research and Publication Committee of the Chamber of Tax Consultants. He's addressed many seminars of the Institute of Chartered Accountants of India, as well as various study circles of WIRC. With this brief introduction, we'll like to invite today's speaker, CS Raj Kapadia.
So before our second speaker started sessions to present, I would like to invite CA Nareshwar Ketan and Delia to present a moment to our second speaker.
Slide is there,
Hello, good morning and welcome. This is, it's really an honor to be addressing this August gathering of chartered accountants, and I thank Jayesh Bhai and the team of conveners for inviting me to address the very relevant and important topic of LLPs, Limited Liability Partnership. I also want to take this opportunity to thank my senior colleague, CS Kaushik Bhai Chaveri ji, who has been a constant source of inspiration to me. And as the topic suggests, it is as the topic is changing paradigm of LLPs. So it has a wide coverage. So how I have structured this is that there are different parts to this presentation. I'll start with the very basics of what the situation has been about LLPs. We will also discuss a comparison between two forms of entities, whether it is a private company with the LLP, whether the firms with the LLP, and then we will take over the amendments which have been introduced and which have been made effective with effect from 1st of April of this year, and also a bit about the new portal as well. So that's how I have structured. So starting with the basics of LLPs, as we know, there is a special act, Limited Liability Partnership Act of 2008, which governs the provisions relating to the LLPs. Now that act was introduced in 2008 and made effective, but till recently, there have been hardly any amendments introduced in the act. Most of the definitions in the LLP Act were referring to Companies Act 1956, which has already been replaced with the 2013 Act since 2014. But still, those references were continuing till very recently, with effect from 1st of April, that new definitions, new terms were introduced, new definitions were introduced. The partnership deed, just like in firms, the LLP partnership deed contains all the terms and conditions. The rights, liabilities, duties of the partners are as defined in the deed. And if deed does not contain such rights, duties, then there is first schedule to the LLP Act under section 23, subsection 4. There is a first schedule which contains details of the mutual rights and duties and liabilities of the partners. So if deed does not contain, then it has to be read under that first schedule. Unlike the companies, there is no concept of equity shareholding in LLPs. It is the mutual contribution of partners, that the partners bring in money either in form of cash or in kind, and that is there. The main activity which would be pursued by the LLP would be in the deed. There are minimum of 2 designated partners which are required and 2 partners. Partners can be either individuals or body corporates. It has a separate recognition under the tax laws as well, the LLPs. It is an incorporated entity. It has a limited liability, which is one of the benefits. And unlike that of a partnership firm, for LLPs, there are annual filings which are prescribed. So whether it is the annual return or the statement of solvency. So in a way, the accounts and the financial figures of the LLP would be available as a public document on the portal and can be downloaded. So that is in a way a disadvantage, I would say. Like we discussed, that partners can be either individuals or body corporates. So a question is that whether HUF can be a partner in LLP. So here section 5 says that either individual or body corporate can be a partner. HUF is not a body corporate. It is not incorporated separately. So HUF cannot be a partner in a LLP. The Karta, who is the individual, can be a partner, but the HUF cannot be. Now, as we talked, that a brief comparison, LLP as a form of entity was introduced as a hybrid between a partnership company. It contains in a way both the benefits of a private company as well as that of partnership firms. So what exactly is the difference? Next few slides, one with the company and then with the partnership firm. So basic, which is the governing law for companies, it is the Companies Act 2013. For LLP, it is the LLP Act of 2008 and the respective rules. Not-for-profit activities. Companies can be incorporated for not-for-profit purpose, Section 8 companies. Partnership, the basic definition itself of partnership, that 2 or more persons sharing the profits of a business of activity carried on by all or any of them acting for all. So profit motive is the basic of partnership. So LLP cannot be incorporated for not-for-profit charitable purposes. Minimum number of members, 2 in case of a private company, 7 in case of a public company. But for a LLP, it is 2 partners and 2 designated partners. So what about the ownership and management difference? Private company has a clear difference between ownership and management, this thing. So the shareholders are the owners, directors are the management. There is no such criteria of distinction available for LLPs. For LLPs, in a way, we can assume that the partners are the owners. The partners will bring in the contribution, and the management details, the responsibility of management would lie with the designated partner. So in a way, there is this, but it is not clearly defined in the act. Maximum number for a private company, 200 members, and for a LLP, there is no upper limit. There is no cap on number of partners, which is why for service sector, for chartered accountants, company secretaries, we have LLP as a preferred mode of conducting the business. There you can have as many partners as you wish to. And ownership and management, we have discussed. The liability of members is, in case of company, limited by share to the extent of unpaid value of the shares. And for liability, it is up to, for LLP, it is up to the agreed contribution. Limited liability is one of the benefits over a partnership form. We will discuss some case law as well, very interesting one. And LLP, the liability is limited to the agreed capital contribution, and every partner shall indemnify the LLP for any loss caused to it by his fraud in the conduct of business of LLP. Some more differences: meetings. For companies, it is clearly defined the number of meetings. You have to have 4 in a year. For a small company, 2 meetings at least in a year, like 1 in every half year. And in LLP, it is as per the deed. There is no such requirement in the act. If deed contains, then you have to have. Admission of partner and member. A person in case of a company, the members can be admitted by becoming shareholder. So either new allotment or transfers of share. And in LLP, admission of partner is as per the deed, whether you have to bring in any contribution or not, or whatever it is, as per the LLP agreement. Share certificate, the rights or interest in the members of the company is evidenced in the share certificate. And there is no such provision corresponding in the LLP. The financial year, again, an important point of difference. Section 241 of the Companies Act clearly states that 1st April to 31st March is the financial year. However, if a company is incorporated after 1st of January, so between January, February, and March, so the first financial year would be 31st March of the following year. So in effect, first financial year maximum can be up to 15 months and for 12 months. That's all. Likewise, in case of LLP, again, it is mentioned that 1st April to 31st March. But if LLP is incorporated after 30th of September, so between October to March, then first financial year full can be 31st March of the following financial year. So up to 18 months is what is allowed. Likewise, the annual filings and all those requirements will become applicable. So incorporation has to be taken care of. Filing of accounts. For companies, it is the balance sheet, profit and loss, financial statements with notes, auditor's report, which are filed with the annual return. And likewise, in LLPs, it is the annual return and the statement of solvency. Audit, statutory audit, mandatory for companies. For LLPs, if it is a small LLP, which has been now defined, we will discuss that. So contribution up to 25 lakhs, turnover up to 40 lakhs, then the statutory audit for LLPs under the LLP Act is not applicable. Profit sharing and remuneration. The remuneration for companies can be given as per the provisions of the Companies Act. The limits and details are clearly mentioned in the Companies Act. And for profit sharing and for the LLP, the profit sharing drawings, interest on capital is as per the LLP agreement. the remuneration also has to be mentioned in the LLP agreement. So LLP agreement is the main governing document, like we have memorandum articles of association. Here it is the LLP agreement between the firm and the LLP. So main point of difference, the law for firm, it is Partnership Act of 1932, and for LLP it is the LLP Act. Registration in case of a partnership firm, it is optional, it is not compulsory. You can have partnership firm without a registration, and for LLP it is compulsory, it has to be incorporated separately. There is a distinct entity. If a partnership firm is not registered, then it will not have a distinct identity with that of the partners. But for LLP, it is a separate legal entity. It is considered as a body corporate. Name of the entity, like there is no naming guidelines or restrictions for partnership firm. But for LLPs, there are clear naming guidelines, which also have been amended in this Amendment Act we will discuss. Number of members for firm, minimum 2 and up to 50 partners are allowed. For LLP, again, there is no upper limit of the number of members. Annual filing for firm, no such provision is required. But for LLP, we have which we have discussed. Now, an interesting case law, the citation is also given, this 2021 126 taxman.com 96, a judgment by the Kerala High Court, whether LLP can be a partner in a firm. So firm has unlimited liability, LLP has limited liability. So how to manage that? That was the objection that registrar of firms took, that how to manage the provisions are contradicting each other, liabilities are contradicting, then how to manage? So registrar of firms stated that some provisions of LLP Act are inconsistent with the Partnership Act, mainly the liability part and the foreign LLP. So foreign LLP can be incorporated, but foreign firms is not possible. So Partnership Act makes partners jointly and severally liable for acts of the firm. For LLP, liability is restricted as per the deed. Foreign LLP is permitted, foreign partnership is not permitted. Then how to do? So what was held here is that LLP is a body corporate and it is incorporated. It is a separate entity. The LLP in itself can have a deed. As it is a separate entity, it can enter into an agreement with another individual to form a partnership firm. That was what it was held here. It is considered as persons under the partnership definition. LLP is considered as a person under the partnership definition. Liability of partner of LLP has no relevance where LLP itself becomes a partner. In this case, partnership deed is executed between the individual and the body corporate. So LLP would have liability independently with that of its partners. That's why it was allowed, and the impugned order of the registrar of firms was set aside. This was one of the case law. Then briefly we will discuss about the incorporation and the conversion part, the procedural aspects as per the new this web portal. What is the scenario? The incorporation now, the Philip form, which is in line with the Spice Plus under the companies. So here the Philip form has been introduced. It is a web-based form just in line with the Spice Plus forms. It is integrated. So just like in Companies Act, now you can obtain DIN of up to 5 partners through the integrated Philip form, up to 5. Earlier it was 2 partners were allowed. Now up to 5 partners DIN you can obtain as an integrated process. You can obtain name approval as well through this single integrated process. You also will now be getting the PAN and TAN numbers of the LLP through this integrated process. So DIN DSC is integrated, obtain up to 5 DINs now. Run LLP, which is a separate form for name approval, but then integrated with Philip also you can obtain the name as well. Form Philip is for incorporation. PAN and TAN also you will get along with Philip. What are the attachments to be given? The ID and address proof of the LLP as well as of the partners and designated partners. The ID address proof recent has to be given. The consent of the partners, which is Form 9, which also has been incorporated with the Philip form. It has to be now filed as a linked form like we have in companies. So Spice, Agile, all those. Likewise for Philip, and this consent in Form 9 will be filed as a linked form. Then subscriber sheet with consent. So once all this has been submitted, the incorporation certificate is received, the LLP deed is to be executed within 1 month of the this obtaining of the incorporation certificate, and that also has to be filed with the Form 3, which is also a web-based form. So this was about incorporation, and next we will also discuss the conversion from company to LLP, and then from LLP to a company as well. So briefly, we will discuss the procedural aspects. First is, of course, the conversion from a private company to a LLP. So in case there are any like obtain the DIN, because the subscribers will become the partners, and partners will have to have the DIN number. So first we have to obtain the DIN, then conduct the board meeting to obtain necessary approvals, pass the resolution for conversion, apply for name availability. The run this form is there for companies, so either through that or through the integrated process. The draft the LLP agreement. So once the board resolution and all is done, you draft LLP agreement, all the clauses you have to decide between the partners. E-form Philip is to be filed for incorporation of the LLP, which we have discussed about the Philip form. The E-form integrated Philip form is to be filed. There is a E-form 18, which is for conversion from an other entity to a LLP. So that form 18, which is also a linked form. So now they have integrated it, and it is like you have to do it as a linked form. Once this is done, Philip and Form 18 is done with all the attachments. So the board meeting, this resolutions, the NOCs, the agreement, all these as a linked attachment you have to file. You have to obtain the incorporation certificate, and then then file the LLP deed in E-form 3. Certificate of incorporation would be received, and the this form 14, which was there earlier, has been now omitted because it was redundant now, because Philip is an integrated form. So form 14, which was to inform the concerned registrar of the conversion and all those. So as now it is integrated, so with effect from this amendment, this form 14 was omitted. A case law relating to this, this 2020, it has been published in taxman.com. This is the NCLT judgment of Kolkata. Section 252 of Companies Act 2013 read with Section 75 of LLP Act and 37 of LLP rules. So private company has converted into LLP with effect from 2012 or 13. It had already converted into LLP. But due to some internal disputes, the LLP had not filed annual returns. 2015, since 2015, the LLP had not filed annual returns. For 2 or 3 years consecutive, the LLP did not file. They were filing other like income tax returns, GST returns, all that was regular, but this annual filing was not happening. So the ROC struck it off due to no activity. It assumed no activity, so the ROC struck it off. Now the issue that rose, that they went into the appeal for this before NCLT, that why the order of striking off. The contention that ROC raised is that there is an option to restore the LLP under 252 of the Companies Act, but Section 75 of LLP Act provides for striking off, but has no provision to restore it back. So now it is struck off, so it is struck off. You can't restore it back. So that was the contention, but it was heard and all filings were made, and as other activities were being carried out, returns were being filed, so restoration was allowed in this case with payment of legal cost and also the filing of overdue. So subject to filing of overdue, they had given 45 days time to complete all the filings, and it was allowed to be restored. So this was another matter. This case law of the NCLAT, the Appellate Tribunal. The The citation is 2019 111 taxman.com, this 431 NCLAT. The registrar of companies Maharashtra versus Kapadia Hotels and Resorts LLP. Again, it was converted into LLP. The company was converted into LLP. LLP deed was filed, duly filed, but there was a resubmission required. This again was a 2012, around 2011, 2012. At that time, for LLPs, the new e-filing module was introduced for the first time for LLPs. And at that time, in 2012, they had filed, but resubmission was not done. I mean, the resubmission was given by the ROC, that document was to be resubmitted, but somehow owing to these changes in system, it was not communicated to the LLP at that time. Like we are having the upgradation from version 2 to version 3. At that time, the upgradation was from physical to e-filing. Then what happened in 2015, the version 2 came of this NCA portal. And in that, if you have not filed LLP form 3, the other annual filing documents was not allowed. It was like linked at that time. In version 2, it was linked to the filing of LLP deed. So from 2012 to 2015, all annual filings were carried out smoothly. But from 2015, it was not allowed because that resubmission was kept opening of the that resubmission was kept open. It was not closed. Therefore, it was creating the difficulty. So resubmission query was not received in LLP. In version 2 of the NCA in 2015, the annual filings were linked with the LLP form 3. So the LLP couldn't file annual filings owing to this resubmission query. Also, the appeal in this case was beyond 45 days without sufficient cause. The company also had not filed appeal within relevant time. So that appeal was set aside. But in the order, the NCLAT has specifically told that while setting aside the appeal, the NCLAT has told that it has upheld the order which allowed LLP deed in Form 3 to be resubmitted without payment of late or additional fee. The earlier order, the ROC went in appeal, but the NCLAT upheld the earlier order that allowed the LLP to file this, because for so many years it had allowed. So now suddenly in 2015, you cannot tell that now the annual filing will not be allowed. So NCLAT allowed this without any payment of late or additional fee, as resubmission query was not received in LLP. And what was stated in the order, last para is that extract, is that adopting a bloodthirsty approach, and that too against compliant entities, is unwarranted, more so when such entities complied with the legal requirements and made compliance in accordance with the then prevailing system. So that is another case. One more is that this 2018 92 taxman.com. This is the Supreme Court judgment against assistant CIT, the Skylight Hospitality LLP versus assistant CIT. Company was again converted into LLP. Notice of reassessment was issued in the name of the company, which was afterwards converted, but notice came in the name of the company, and that was challenged, that this notice is not valid. So the High Court had held that it is not a jurisdictional error, but it is merely an irregularity and a procedural error or a technical lapse, which can be cured under section 292B. That would not invalidate the reassessment proceedings. So this special leave petition against the order was dismissed by the Supreme Court. Now the other way around, the conversion from LLP to the company. Very briefly, the procedural aspects. You need a consent. So earlier we have seen from company to LLP, such consent from creditors, partners are not required. But for conversion from LLP to company, this consent is required from all the partners. Again, it is as per the deed, whether there is a meeting and the resolution is to be passed, or you have to have a written consent. That again will have to be checked in the deed. Accordingly, you have to obtain consent and advertise that consent in all the in the newspaper. So one in English and another in a local vernacular newspaper. If any objections are there, then the objections would be invited and those would be first heard. Then there would be the Spice Plus forms for conversion into company. So Spice Plus form would have to be prepared and filed. There is a URC1 which is there for such conversion from unregistered entity to a registered entity, unregistered under the Companies Act. So for any other form of entity into Companies Act, this URC1 form is there. So that URC1 and Agile Pro for all other registrations to be transferred, whether it is the GST or shops establishment and other things. The statement of assets and liability of the LLP is to be prepared for the solvency position. This statement of solvency, which is filed annually, so such a statement of assets and liabilities is to be prepared. The memorandum and articles of association of the companies have to be prepared. If there is any foreign subscriber involved in the company, then all the documents, including consent, will have to be apostilled and notarized by the foreign embassy, and then only the notarized document will have to be filed. The DIR2 consent, which is there for the directors, INC9, which is the consent for the subscribers, will be filed along as linked forms. So all these forms would be as a linked thing. The Spice Plus, the URC1, the Agile Pro, the INC9, all these are now in the new portal. It is as a linked form. Under the ease of doing business, it is now that instead of all others. So for a company also now, at the time of conversion or incorporation, all changes happen as an integrated process, whether it's a PAN, TAN numbers, other registrations, opening of bank accounts, all those things are as an integrated process. All these are to be filed and the certificate of incorporation is updated. Very briefly, the annual filings which are to be made, we have discussed Form 8, Form 11. Also, there is one DIR3 KYC which is there for companies, but for all designated partners also this KYC is to be updated. And all these are now web-based forms, which are in most of the cases, at least we have seen that the details are pre-filled. If you enter the LLP, IN number, details of partners and all the thing, contribution, all those things are pre-filled. Of course, there are some technical issues with the website and the data correlation, but other than that, they are being pre-filled. You just have to submit it. You have to download those forms offline. You have to affix the digital signature and upload it and pay the fees. The tax rate and the audit provisions, again, before we go into the amendments which have been recently introduced, the tax rate and the audit provisions of which are applicable for LLPs, briefly, that in line with firm, it is considered for Income Tax Act, the provisions are the same as what is applicable to partnership firms. Flat rate of 30% is charged for the firm or the LLP's income without any exemption, plus which is added with the 12% of surcharge if the income crosses 1 crore, and the tax 30% plus the surcharge is further added by 4% of health and education cess. Remuneration is allowed only to working partner, the designated partners. The remuneration will be allowed only if it is mentioned in the deed. So care is to be taken to, while drafting the deed accordingly, to provide for all such aspects wherever applicable. Remuneration, if it is provided, only then it will be allowed. The remuneration allowed as per this table, the up to 3 lakh of book profit, it is 1.5 lakhs or 90% of book profit, whichever is more. And for the balance over and above 3 lakh of book profit, it is up to 60% of such amount. A simple interest is allowed at the rate 12% to partners as per the Act. And of course, the alternate minimum tax is applicable in case of LLPs at 18.5% plus the which is added for the charges. Then audit provisions, very briefly, under the LLP Act, the statutory audit we have discussed, if the contribution and turnover, contribution 25 lakhs and above, audit and turnover 40 lakhs and above, then the statutory audit under LLP is applicable. Tax audit, if the income exceeds 1 crore in case of a business and 50 lakhs in case of a profession, then such accordingly tax audit. And also for tax audits, turnover, if such turnover exceeds 10 crores, then aggregate of cash receipts or cash payments cannot be 5% of such amount, which is the amendment and which has to be taken care of in case of business, that this cash payments, cash receipts have to be taken care of. Now we will come to the amendment part. This slide discusses briefly about the various amendments which have been introduced under the Amendment Act, which has been in place. So till now we discussed the basics, the conversions, the tax provisions, audit provisions, case laws. Now to the recent changes which are currently in place. This slide is talking about that. The first thing is the definitions which have changed, which we talked about at the start. The references under LLP Act were as per Companies Act 1956 for so many years. Now the same has been amended with, which is in line with Companies Act 2013. Most of the amendments have been such that the provisions of Companies Act have brought the LLP and Companies Act have been brought in line in a way. Small LLP as a concept has been introduced first time in this Amendment Act. As we discussed, contribution up to 25 lakh and turnover up to 40 lakhs. And of course, by way of rules, the central government can prescribe a higher amount. So for contribution up to 5 crores, the government can prescribe. For turnover up to 50 crores can be prescribed. So that power has been given, but currently the limits are 25 lakh, 40 lakhs. If such small companies and audits won't be applicable, the professional certifications by professionals also would not be applicable for such small companies. Also, startup LLPs have been defined here for the first time. The LLP can be incorporated as startups. So that also relaxation has been given. So two relaxations which we talked about, and one more is that penalty provisions. If any contravention is there, if it is a startup LLP and a small LLP, the penalty for such LLP cannot exceed 1 lakh rupees, and for every partner 50,000 rupees. That is the upper limit. Beyond that, penalty cannot be levied. One more is that NFRA has been now given power to prescribe a separate set of standards, whether accounting standards, auditing standards for LLPs. Also, like format of financial statements, all those things may be prescribed now in due course for LLPs as well. We discussed about the registration of LLPs as startups. So very briefly, the regime of startups, it can take a long time, just this discussion, but very briefly, if I have to just touch upon these points. So startup entity, an entity can be incorporated as startup if it is a private company, a one-person company, a registered partnership firm, or an incorporated LLP. Only these 4 entities, and newly incorporated, no amalgamation, like entity out of amalgamation, reconstructed, those entities are not allowed. It has to be a freshly incorporated entity. So LLPs are allowed to be registered as startups up to 10 years from the date of incorporation or registration. Turnover, also there is a limit. Turnover since incorporation or registration is less than rupees 100 crores in any of the financial years. So moment it crosses 100 crores, the registration will be revoked. It is working towards, first is innovation, development, improvement of products or processes or services, or if it is a scalable business model with a high potential of employment generation or a wealth creation. It has to be one of these 4, and you have to actually explain at the time of registration in what way such a in what way, what is the problem exactly that is being solved for it to be registered as a startup, what is the market in which is relevant to the market in which the concerned entity is. That has to be expressly written at the time of registration and filed, that what is exactly the problem, what is the improvement, what is the new process or product or service, provided that any such entity formed by splitting up or reconstruction of a business already in existence will not be considered as a startup. So what are the details required for registration as startup? The first is the relevant incorporation document for company or LLP or the registration certificate. Authorized person details, the personal details, whether it is the DIN number, PAN number, Aadhaar, it is authenticated. Directors or signatory details are to be mentioned. What is the gap that the startup is solving, which we discussed? It has an express paragraph you have to write and file. How is it solving the gap with specific focus to market? So general answers would not be accepted. It has to be a specific with focus to the market. Whether the product is an innovation, improvement, or large-scale employment generation. These are the questions to be answered. And very briefly, why to register a startup? What are the benefits? Again, I mean, it can involve us like detailed discussion, but very briefly, if I want to cover, there is one thing which is a relaxation in public procurement. There is a separate marketplace, which is the government e-marketplace. A startup can register under the this GEM, government e-marketplace portal, GEM portal. There are relaxation in prior turnover, prior experience, in earnest money deposits. All those relaxation are provided for startup registered as well as the MSME registered, Udyam registered entities. They can register. So this GEM portal is where the products and tenders are sourced by the government. The government, for any product, service, tenders, it sources the same from the GEM portal. So which is why it is important. So there are relaxations available for startups. IPR relaxation, fast tracking of patent applications. There are facilitators as well for IP if it is a startup. There are rebate for patent applications up to 80%. For trademark applications up to 50%. So at the time of registration of trademark itself, if you file the startup registration certificate, straight away there is a discount available of 50% for the application fee. Self-certification under the labor laws, which is the compliance under 6 labor and 3 environmental laws for a period of 3 to 5 years based on self-certification. The scrutiny and questions will not be asked if it is certified by the promoters. There is exemption. So under taxation, again, there is exemption under 56(2)(7)(b), which is the dreaded angel tax. So any premiums which are charged by such startups will not be questioned if it is registered as startup entity and the due declarations have been filed with the department. Faster exit, easy exit scheme for startup, which is like the time is reduced to 90 days instead of 180 days. Section 80 IAC exemption, again, for 3 out of 10 years, which is available as an option. The startup can itself choose the 3 years wherein the income would be exempted. Now coming back, so this was, we had discussed something about the Amendment Act and also like some features of startup. So back to the Amendment Act. Now these are some which wherein clauses are either new definitions have been new definitions have been notified. In next few slides we will discuss that either new definitions have been notified or some provisions which have been made in line with that of Companies Act. First of all, definition of business, the scope has been enhanced. Now that it mentions that it includes every trade, profession, service or occupation except activity which central government may by notification exclude. So in a way it has enhanced the scope. Second very important amendment which has taken place is the residential number of days for a residential status. For this amendment was, if I remember, it was introduced under the initiative of Atmanirbhar Bharat, the announcement which were made by the finance minister and the prime minister as well. So instead of earlier, it was a 182 days stay, which was required for any partner to be able to incorporate LLP. The designated partner, just like in companies, we have a requirement that designated partner, at least one, has to be residing in India. All foreign partners would not be permissible. So, and such period of residence was 182 days. It has now been reduced to 120 days. So if such designated partner stays in India for 120 days, then such designated partner can be appointed in LLP. Names. So this provision made in line with that of Companies Act. The name availability clauses. Earlier, the left portion of the slides would be the before part and right portion would be after the amendment. So before was that the name, if they are identical or too nearly resembles to that of any other LLP company or a registered trademark or any other person. Right one, what has now been amended is that central government has been given the power. So in a way, I would say that the CRC, which handles the incorporation and the conversion part, the powers have now been given to CRC that yes, if CRC thinks that it is resembling or to that of any other LLP company or registered trademark, then CRC can raise objection. So that is the amendment. Similar to change of name. Earlier, what was there is that in case of same name, government may direct to change the name within 3 months. And relating to that, section 18 was there that application for direction to change of name. So that has been omitted. What has been amended is that now, even if the name is allowed, the trademark owner can make application within 3 months of such name approval. If there is any objection, the trademark owner can make such application and raise objection with respect to the name which has been approved. Proviso is that application by trademark owner is maintainable up to 3 years from incorporation or such change of name. Next is accounting standards for class of LLPs, which we have discussed. Similar to the section 132 of Companies Act, the NFRA has been given the powers. Compounding of offenses, again, it has been brought in line with the Companies Act. So this PPT has in detail and it is available with the conveners and will be shared for reference. I'll discuss briefly what exactly has been changed. What has been changed in compounding of offense is that the period, if there is a same offense which has been conducted after the expiry of period of 3 years from the date of earlier offense, then it shall be deemed to be the first offense. This provision was there in the Companies Act that up to 3 years you can after 3 years this offense, then it will be charged as the first offense. So this has been brought in line now with the Companies Act. What is this LLP Act? So now this was about some definition changes. Now, what we will discuss in next few slides is the changes in penalty provisions. Earlier, there was a kind of a discretion which was available to the registrar of companies to levy fines on the LLPs. But now, what has been amended is that from fine it has been changed to a monetary penalty, and the discretion has been removed. We will see that there is a range which was given and that penalty can be levied within that range. But now there is a fixed penalty which has been levied in most of the cases. So first of all is this punishment for contravention of section 7, 8 and 9. All these 7, 8 and 9 deal with the designated partner and changes in the designated partners. 7 is for individuals who are eligible to be appointed as designated partners. Section 8 is liabilities of designated partner, and 9 is changes in the designated partners. So any such contravention in these sections, the penalty was 10,000. The fine earlier was a discretion between 10,000 to 1 lakh rupees. Now what has been amended is that 10,000 is a penalty, and for a continuing offense, rupees 100 per day, subject to 1 lakh for LLPs and 50,000 for every partner. For section 7, which is consent to act as a designated partner, if such consent is not obtained and there is a contravention, then the penalty is rupees 5,000, and for a continuing offense, there is 100 rupee per day penalty, up to 50,000 for LLP and 25,000 for the partners. And if there is contravention of section this 7 subsection 5, which is individuals eligible to be appointed as designated partners or any changes in designated partner, section 9, then there is a fixed penalty 10,000 rupees and a continuing offense further 100 rupees per day, up to maximum of 1 lakh for LLP and 50,000 for designated partner. Registered office of the limited liability partnership. Earlier, there was a fine of 2,000 to 25,000. Now, if there is any contravention, then a fixed penalty, there is a penalty of 500 rupees per day, up to maximum of 50,000 rupees. That is what. So again, discretion 2,000 to 5,000, that has been removed. a, a case law, brief case law relating to this, the change in this registered office. It is a judgment of the Delhi High Court. It is a matter of 2022. The judgment has been received on 25th Feb 2022. What happened in this case? It is about section 13, which we talked about, the registered office. So just like in companies, the LLP also have to have a fixed registered office, which is capable of receiving notices and communications. So what happened here is that there was a LLP which was incorporated in Hyderabad. It has it had a LLP deed. LLP deed stated that it was incorporated in Hyderabad and it was conducting most of the business in Delhi. The business, the LLP had business in Delhi and the products were sold in Delhi through both online and physical modes. But the registered office was in Hyderabad. The books of accounts were also maintained at the registered office, which is Hyderabad. Now, one of the partners wanted the access to books of accounts, which was the subject matter of this dispute. The access to books of accounts of LLP was denied to the plaintiff. The reason was that application was filed in Delhi and was stated that as LLP had business in Delhi and the products were sold through both offline and online modes, the jurisdiction was Delhi. LLP agreement contained the clause that registered office of LLP is in Hyderabad. So Hyderabad is the jurisdiction, the ROC jurisdiction. Agreement also stated that books of accounts of LLP were to be maintained at the registered office. Agreement also stated that courts of Delhi would have jurisdiction in case of any dispute. In this case, the High Court held that there is no principal or subordinate office which has been set up in Delhi. Neither the accounts are maintained in Delhi. Jurisdiction of courts cannot be decided by the LLP agreement. So this was what was held, and this application was not allowed because Delhi did not have jurisdiction. Just because you have most of your business in one place, you cannot decide the jurisdiction of the court. Next is publication of name of LLP. Just like companies, it has again been made in line. So you should have the nameplate of LLP with the detail, the LLP IN number, and same on the notices, invoices. Again, the discretion was 200 to 25,000 a fine, but after amendment, it is a fixed penalty of 10,000 rupees. Changes in partners clauses. Earlier, so one clause is that the partners informing the LLP of any changes, and then second is LLP informing the ROC of such changes within 30 days of such change. So that is a cycle. So in the first stage, if the partner does not inform the LLP, then there was a fine of 2,000 to 25,000. And if LLP does not inform the ROC, then again there was a, on same line, the further fine of 2,000 rupees to 25,000. There was a discretion. Now is that notice regarding becoming or ceasing to become a partner. So any changes in the partner provisions, now there is a fixed penalty of 10,000 rupees. And further, the notice regarding change in the name of partners or any address of partners by LLP to ROC, there is a fixed penalty of 1 lakh rupees. So that discretion has been removed. Unlimited liability in case of fraud. In case of fraud, in the event of an act which is carried out by LLP or any of its partners with intent to defraud the creditors of LLP or any other person and for fraudulent purpose, intent to defraud, there is the imprisonment as well as there is a fine. So imprisonment was earlier for 2 years and fine 50,000 to 5 lakh. What has been amended now, owing to such fraud provisions, what has been amended is that the imprisonment period has increased from 2 years to 5 years. The penalty clauses remaining the same. Compromise or arrangement of limited liability partnership. In case of non-filing of order of which is made by the tribunal, the fine was up to rupees 1 lakh. Now, in case of such non-filing of tribunal order, there is a fixed penalty of 10,000 and for continuing default 100 rupees per day. and subject to maximum of 1 lakh for LLP and 50,000 for designated partners. Reconstruction or amalgamation of LLPs. Again, for non-filing of such order made by tribunal under this section, there was this fine which may extend to 50,000. So there was again a discretion. And after the amendment, again the penalty there is fixed at 10,000 rupees, and in case of continuing default, a further penalty of 100 rupees per day, subject to 1 lakh rupees for LLP and 50,000 rupees for designated partner. What is important in this case, which is highlighted, that LLP shall not be amalgamated with the company. This provision was like, there were cases like couple of years, some cases it has been allowed, some cases not been allowed. Now, to break that ambiguity, clear-cut amendment has been introduced that LLP with LLP, company with a company. What may be the reason? Now, this is not the official, but according to me, that there are independent clauses. LLP Act has its own clauses for reconstruction, and companies has separate clauses. So, if an LLP wishes to incorporate to amalgamate with the company, then you convert it into a company and then carry out the amalgamation procedures. That is what way can be understood by this amendment. Special court, again in line with Companies Act, this is what amendment has taken place, as special courts now have been notified. Central government, for the purpose of speedy trials of offences, established special courts under this, and special court shall consist of a single judge holding office as a sessions judge or additional sessions judge in case of offences punishable under this act, with imprisonment of 3 years or more. A metropolitan magistrate or judicial magistrate of first class in case of other offences, who shall be appointed by central government with the concurrence of Chief Justice of High Court, and provided that until special courts are designated established under this act, special court under Companies Act shall be the special courts which are taken. This again is a new clause which has been introduced. The procedures and powers of special courts, very briefly I'll take through. All offences under 67A shall be triable by special courts which would be designated in respective areas. While trying under this act, the special court may also try an offence other than an offence under this act with which the accused may, under the Code of Criminal Procedures, be charged in the same trial. This power has been allowed. Notwithstanding anything contained under the Code of Criminal Procedures, the special court may, if it thinks fit, try in a summary way any offence under this act which is punishable for a term not exceeding 3 years. If such a case is there, then summary trial powers have been given to a special court. In case any conviction in a summary trial, no offence for imprisonment of term exceeding 1 year shall be passed. So even in summary trial, imprisonment up to 1 year can be passed. Only then a summary trial can take place. However, if at the commencement or in the course of such a trial, it appears to the court that the nature is such that sentence for a term exceeding 1 year would be required, or for any other reason, if it is undesirable to try case summarily, then special court shall, after hearing the parties, record order to that effect and recall any witnesses who may have been examined and proceed to hear or rehear the case in accordance with procedure for a regular trial. Registration offense of offices, again new section which has been introduced. Basically they have been provided for registrars, additional registrars, joint registrars, so all those who are already in place. So just an enabling clause which has been introduced in the Amendment Act. So the powers have been given to them. Additional fee also, in a way, a big relaxation, I would say, that has been provided. The additional fee has been reduced for LLPs to a large extent. Earlier, before the amendment, it was that 100 rupees per day, the additional fee was being charged with no upper limit. Whether it is up to 365 days or beyond 365 days, there was no upper limit. I mean, for Form 3, which we discussed, the LLP deed, I have seen cases where 2020 incorporated LLPs have not filed the deed, And when they come to me at the time of the annual filings, the late fee was in many thousands, if not in lakhs. It's a very harsh provisions they were. But now what they have done is that in line with the Companies Act, they have given a slab for late fees. This slab is mentioned in this table. There is separate fees again for small LLPs, startup LLPs, and for other than small LLPs. There is separate slabs which have been mentioned. Up to 15 days of a delay, that period of delay from the due date up to 15 days, it will be one time. So no additional fee would be charged. So for 15 to 30 days for a small LLP, 15 to 30 days would be 2 times, 30 to 60 days would be 4 times, 60 to 90 days 6 times, 90 to 180 days would be 10 times, 180 days to 360 days would be 15 times, and beyond 360 days would be 25 times of normal fee. For other than small LLP, similarly, it is 1 time, 4, 8, 12, 20, 30, and 50. So it is basically 2 times. So for other than small LLP, the twice the amount. But for annual filings, Form 8 and Form 11, there is a special concession in a way that for small LLP, it is a 15x of fee. So for 360 days and more, if there is any delay for annual filings, there is a 15x fee which is there, plus 10 rupees per day for a delay beyond 360 days. So that is the maximum. Come down from 100 rupees delay from day 1. Instead of that, they have given time till 360 days and thereafter 10 rupees per day. For other than small LLPs, similarly, it is a 30 times of normal fee, which is twice this thing, 30 times normal fee plus 20 rupees per day for every day of delay. This is the fee structure. Some example just for ease of understanding. Form 11, which is the annual return, for 31st March 2022, required to be filed within 60 days, which is 30th of May. Now, of course, the time has been given only for this year, considering new version. Time has been given till 15th of July now. It was extended firstly till 30th June, now till 15th of July. Time has been given where no late fee would be levied. But now, assuming that it is filed on 31st of August 2022, which is around 92 days of delay. After 15th of July, assuming no further extension, the late fees would be levied. So assuming that 31st of August, which is like around 92 days of delay, the earlier fee structure was that normal fee, assuming a contribution of 1 lakh rupees, 50 rupees of a normal fee, and 100 rupees per day for 92 days is 9,200. So 9,250 rupees was the late fee for Form 11 for a 92 days delay. In the new structure, rupees 50 is the normal fee. In case of small LLP, it is 10 times of normal fee, the 90 to 180 days, 10 times of normal fee, which is rupees 500. And for other than small LLP, 20 times of normal fee, which is rupees 1,000. So maximum it can be charged is 1,050 rupees, down from 9,250. Another example, if we take then Form 11, which is for 2021, 30th May 2021 is filed on 8th of April, assuming 8th of April 2022. Around 313 days of delay. 313 days of delay is there. So what was as per the old structure? Rupees 50, the normal fee, plus 100 rupees per day for 313 days is 31,300. So total was 31,350 rupees late fee for 2021, this 300 days delay, 300 plus days delays. In the new structure, it is 50 rupees normal fee plus 15 times of normal fee as per the slab rate, which comes to 750, and 30 times of normal fee, which comes to 1,500. So maximum fee from 31,300, it is down to 1,500, 1,600 around. So that much relaxation, much needed, which has been now provided. The tribunal and appellate tribunal jurisdiction, again, which was like in line with Companies Act, they have been made available for LLP amendments as well. Earlier, it mentioned the references to 1956 Act of this Companies Act 56, which is Section 10FQ, 10FZA, and all this, which has been now removed. And the amendment is that any person aggrieved by order of tribunal may prefer appeal to the appellate tribunal. And what has been amended is that the appeal shall be filed within a period of 60 days from date of on which copy of order is made available, and further 60 days relaxation on sufficient cause. General penalties: any person found guilty of offense shall be liable to fine up to 5 lakh rupees and 5,000 which shall not be less than 5,000. So in a way that discretion, and with a further fine of 50 rupees per day. Now what has been amended is that penalty of 5,000 rupees and 100 rupees per day, subject to maximum of 1 lakh rupees. Jurisdiction of court: the special courts which have been notified, the jurisdiction has been given in this section, section 77, which is the new section. The special court referred to in section 67A, which is the single judge holding office as sessions judge or additional sessions judge in case of offense is punishable with imprisonment 3 years or more, shall have jurisdiction to impose punishment under section 30. Criminal cases against LLP or partners or designated partners in default filed under this act pending before the court of judicial magistrate of first class, this may be transferred to the special court. So jurisdictions have been given for different offenses to the special court, and notwithstanding any provision to the contrary for the time being in force, judicial magistrate of the first class or case of metropolitan magistrate shall have jurisdiction to try an offense under this act and shall have powers to impose punishment. Cognizance of offenses: the no court other than special courts referred to in 67S shall take cognizance of offense. So again, this clause has been given as an enabling clause. The power to remove difficulties, which is the new section. So the government can pass any like clarificatory orders which have been given, and there is a transitional provision in section 81 which is omitted because it was based on 56 Act provision. It was redundant. Now comes very important provision. There is a 67 section of under the LLP Act which enabled the MCA to make any provision of Companies Act liable to LLPs. Under this power, there have been certain clauses of the Companies Act which have now been made applicable to the LLP. So what are those clauses? Section 164, which is disqualification, 165, which is number of directorship, 167, which is vacation of office, 206, 207, which is inspection, inquiry, 252, which is the appeal to the tribunal, offenses to be cognizable, which we discussed. So briefly, if we discuss, first of all, very important is section 90, which the provision were not there till now, relating to beneficial ownership. The MCA wishes to know that ultimately paisa kiska hai LLP mein. If there is a body corporate, who is the person behind, who is whose money has come. This provision is there for companies. Now it has been made applicable to LLPs. So now the register of beneficial ownership would be required to be maintained even in LLPs. Likewise, there may be notified that the form which is bend 1, bend 2, those like the detail of beneficial ownership basically would be required to be filed as well with the ministry, with the ROC, that provisions relating to beneficial ownerships. So this clause has been made applicable. Section 164, subsection 1 and 2, mainly which deal with disqualification of directors owing to non-filing of accounts and returns. What was made, what was there for companies has now also been made applicable to LLPs. Till now, such directors could have continue as partners in LLPs, but now due to this, they would be disqualified for a period of 5 years with effect from 1st of April 2022. 165, which is limit on number of LLPs in which a designated partner can be appointed. 20 such LLPs have been notified. Earlier, there was no such limit, but now 20 LLPs is the limit. And also a fine of 5,000 till 25,000 has been notified. Section 167, which is vacation. If there is any disqualification, then such office of the designated partner would be automatically vacated. Now, a case law relating to this disqualification, because when it had originally been notified, like 2016-17, the NCA had disqualified many such directors. So there were multiple issues, and there have been certain interesting judgments which I have incorporated here. 2021, this judgment by Kerala High Court, Section 164 read with Section 167, which question the constitutional validity of such a provision. So what judgment extracts from the judgment I have introduced, I have incorporated here, what the judge has told is that financial disclosures is a critical component of effective corporate governance. Filing of financial statements and annual returns by incorporated entities at regular and stipulated intervals is crucial to ensure transparency. The purpose of such a requirement is to make directors answerable, to protect the creditors and general public from mismanagement. This was what was in the order. Notice under, so another clause of dispute here was that for 3 years, non-filing for 3 years, would the company would be struck off and the directors would be disqualified. But before that, for 2 years, if there is no activity, Section 455 says that you issue dormant company, that company is dormant. So why such a notice is not issued and directly you have proceeded to strike off? That was another dispute, for which it was stated by the judge that a notice under Section 455, which is declaring the company as dormant, is not a sine qua non for applying provisions of Section 164. So you cannot take a plea that nahi, pehle aap dormant company banao, fir aap strike off karo. And another thing which was held that because of such a disqualification, you cannot cancel or deactivate the deal. Such disqualification is a temporary period of 5 years. So such a deal cannot be cancelled or deactivated. You have to keep it active. And of course, that annual KYC and all also have to be filed for such. Otherwise, then at the time of, again, restoration, at that time it will be applicable. More the provisions of Companies Act which have been made applicable to LLPs, Section 206 and 207, which basically empowers the ROC to conduct inspection, inquiry into the books and affairs of the LLP. 439, which is the offenses to be non-cognizable, and the special courts have been notified, NCLT and NCLT, all that in the Amendment Act have been notified, so which we have discussed. LLP amendment, these rules also have been notified with effect from 4th of March 2022. So very briefly, we will discuss about the same as well. Just a time check. Okay, I'll wind up quickly. So with effect from 4th of March 2022, the LLP amendment rules have been notified. Very briefly, earlier, which we discussed at the time of the start point, that earlier it was up to 2 DINs which could be obtained with the Philip in the incorporation form. Now up to 5 DINs can be obtained as an integrated process. This is that rule. Next is form number 16. The following words shall be inserted is that the PAN number and TAN number issued by the income tax. So at the time of incorporation, now you can obtain, the LLP can obtain PAN and TAN as well. Person making application shall attach copy of incorporation certificate of the LLP or the company or the registration certificate of the entity, as the case may be. Why this amendment in Rule 19, the requirement of attaching authority under which such person is making application under Rule 19 is taken down. So again, at the time of conversion or incorporation, this rule has been made. So most of these are in a way enabling provisions for further ease of the procedures. Next is where corporate resolution process has been initiated under LLP. In that case, statement shall be signed on behalf of LLP by interim resolution professional. So due to this amendment, in cases where the corporate insolvency resolution process has been initiated on LLP, then the statement of account and solvency may be signed by the IRP resolution professional or the liquidator as well. Again, an enabling provision in case of the CIRP process if it is initiated. And then the proviso to Rule 25, which states that if the insolvency resolution process has initiated on the LLP having turnover up to ₹5 crores during the corresponding financial year or contribution up to 50 lakh rupees, and it has come under liquidation under the code or the Act 2008. The said annual return may be signed on behalf of the LLP by interim resolution professional or liquidator or LLP administrator, and no certificate by designated partner shall be required. So again, an enabling provision, because to address the difficulty for relating to signing of annual returns. Form 29. So this was about the foreign LLPs which have been introduced. That this Form 29 is now merged with Form 28, which was about the formation and having of foreign limited liability partnership. So now, for these four purposes, a single integrated process, again, as a ease of doing business, can be carried out, which is alteration in the certificate of incorporation of the LLP, for alteration in names, addresses of any of the persons who are authorized to accept the service on behalf of the foreign LLP, alteration of the principal place of business in India of the foreign LLP, and cessation to have a place of business in India of the foreign LLP. For all these four, now a single integrated form is there. In Rule 36, after the word bracket, the word and figure Form 32 shall be inserted. So reply to registrar and in any notice would now be given in Form 32. And for the first, along with Form 24, the words of furnished in Form 24 shall be substituted. So that is just a technical, this typographical, thing. Now, again, this new version of LLP, which has been introduced, very briefly, the features, like what exactly, because there are so many issues, again, technical issues which are there on the website and which are being faced. So very briefly, what features are there? Let's discuss that. Of course, there are technical issues for which on an ongoing basis, there are queries raised, there are resolution which has been provided, there are updates which are taking place on an ongoing basis. But basically, what were the features which are the proposed changes in the version 3, which is already introduced for LLPs, and it is in the pipeline for companies. In very near future, we may have this similar version for companies as well. It is basically an integrated like data from various sources the government would be collecting, and most of the things in this would be pre-filled. Like we have income tax returns which are now getting pre-filled at the end of the department itself. Likewise, the various returns which are applicable for companies, for LLPs, will be pre-filled based on data which is already there and which would be gathered from different sources. So what would be the features of the version 3? The e-adjudication, which is like digital transformation of adjudication and e-hearings, which is just like in case of e-assessments which are being carried out. E-consultations, public consultations on proposed changes in acts, rules, amendments. E-books, which is digitization of acts, data dissemination from various sources of government, and a compliance management system. So for all logins which would be created on the new portal for LLPs, currently we are creating separate logins for LLPs, separate logins for designated partners. We are creating the logins using the DIN number. We are updating all the details. The OTPs are being sent. The respective digital signatures are being validated through that login ID. And then only we are able to, currently we are in process of filing all the annual returns. So this is the process which is to be carried out for all the designated partners, creating logins. You register the digital signature, you sign on the forms and then upload the forms using the same ID wherein you have filed it. So briefly, the features of e-scrutiny. So MCA is in the process of setting up a central scrutiny cell which will scrutinize certain straight-through process forms filed by the corporates on the MCA 21 registry and flag the companies for in-depth scrutiny. So currently, which the forms are being approved through STP mode will be processed for further scrutiny. E-adjudication module has been conceptualized to manage the increased volume of adjudication processing by the ROC and RD and will facilitate end-to-end digitization of the process of adjudication for ease of users. It will provide a platform for conducting online hearings with stakeholders and end-to-end adjudication electronically. The rule also has been amended, which we will see in the next slide. There is an e-consultation module, and the MCA is currently in the process of having a public consultation on proposed amendments and draft rules. E-consultation module of MCA will provide online platform for proposed amendments. Draft legislations will be posted on the website for users, and comments and suggestions would be taken in the structured digital format. There's a compliance management system which will be put in place for non-compliant companies, LLPs. E-notices to the said defaulting companies or LLPs, there would be alerts which would be generated. It would serve as a technology platform for conducting a rule-based compliance checks and undertaking enforcement setup for corporate law experts, which is to evaluate the effectiveness of the system, the e-consultation modules, enforcement modules, and suggest enhancement. There will also be a cognitive chatbot enabled help desk, mobile apps, interactive user dashboards, enhanced user experience using technologies, and seamless data dissemination. All this is in the pipeline proposed. E-adjudication of penalties. What are the amendment in the rules which have been prescribed for e-adjudication? The adjudication officers not below the rank of registrar. So registrars respective of the jurisdiction can issue show cause notice with the time to reply within 15 to 30 days and extended due to sufficient cause by another 15 days. This is so the registrars can issue such notices. Contravention is to be clearly specified along with the maximum penalty which can be imposed. This is, mind you, this is for all STP forms as well. So this is what is being proposed. Reply is to be filed with the electronic mode. If physical attendance is required, then the adjudicating officer will issue such a notice within 10 days. Adjudicating officer would pass the order, and copy of which would be sent to the concerned LLP, the designated partner, the regional director, and also would be uploaded on the website. Penalty is to be paid on the portal itself, MCA portal. Next, 37B says that appeal against such an order of adjudicating officer is to be filed with the RD, the regional director, within 60 days from the date of receipt in Form 33. The grounds of appeal and the certified copy of order has to be attached to such forms. Again, it will be this e-form. Extended period of 30 days may be allowed with sufficient cause. Rule 37C is that the regional director's office is to endorse such appeal and sign, and registered number would be given to and a serial number would be given. So basically it would be endorsed by the RD if it is accepted. And if there are any defects which are found in such appeal, then the time is given up to 14 days to rectify, and further 14 days with sufficient cause. And Rule 37D, which is disposal of appeal. So the RD will seek reply from adjudicating officer for the appeal within 21 days. Copy of reply is to be served on appellants as well. The date of hearing then would be notified by the regional director, which would be over 30 days from the date of notification of hearing. So 30 days time would be given for hearing. Regional director may grant adjournment for reasons which are to be specifically recorded. If appellant does not appear, RD may dispose of the order ex parte. For sufficient cause, the ex parte order may be set aside, and order is to be signed, dated, communicated to the adjudicating officer, the appellant as the government. This is the procedure for the e-adjudicating or this the process which has been already notified in the rules. Again, briefly, the new version of LLPs, the majority forms for LLPs would be digitized web forms. There are multiple FAQs which are available on the portal. Using the SIN or the LLP IN number, SIN, of course, once it is notified, using LLP IN number, the relevant logins for LLP is to be created. LLP, for other designated partners, login would be through the respective email IDs. A single Philip form now, under the ease of doing business, a single Philip form, web form, can be filed now up to 500 partners. To begin with itself, up to 500 partners can be included in this. Web forms are to be digitally signed by the designated partners and professionals. So web forms are to be like, you will enter the details, most of it will be pre-filled. The DIN entered, the details would automatically be pre-filled. You will save the form, you will submit the form and download it offline. Then, just like in the earlier format, the downloaded forms are to be digitally signed and they are to be uploaded and the fees are to be paid. Certain incorporation forms are introduced as linked form, which is Philip, Form 9, Form 17 or 18 are as a linked form. Again, Form 3, which is for the deed along with changes in designated partners, are also introduced as linked form. The size of attachment has been increased. Earlier, all the forms maximum 6 MB, but now the size has been increased to 10 MB per form, but attachment size has been restricted to 2 MB per attachment. That has to be taken care of. EM bridge is to be installed, which is in line with the income tax the site. The M bridge is to be installed on the system for digital signatures. For resubmission of forms, so once you log in, there is a My Application tab which will contain all the application status of the LLPs and any queries, resubmission request. The SRN numbers would be given and the status like pending for digital signature affixing, pending for payment of fees. The status also would be displayed. Payments are now being accepted through UPIs as well. So net banking, credit card, debit card, and also through UPI, the option is there. So how to log in? First, for the users who are already in existence. So for existing users, you are not required to create a new login for LLPs. Once you log in, the profile needs to be updated. It will by default be a registered user. You have to update it to a business user, and you have to fill in your details, your membership number, the PAN number, which are validated. All these details are to be filled up and submitted, and then the user can start we will have access to all the forms of LLPs. So as a registered user, only the incorporation forms would be available. If once you update it to a business user, you input your membership number, PAN number details and validate, it will be updated to business user and all the forms would be available for you. Again, as we said, the profile update button which is there will have to be updated. User needs to update his or her profile as a business user and fill the required detail. The OTP would be sent and further all logins would be through the OTP. Registering the digital signature, in the earlier version 2, it is the same as it was before. There is no change for companies, this DSC. For LLPs, for designated partners, now you have to log in to the respective designated partners login ID. Using the DIN, the respective role play is to be selected as a designated partner. DIN is to be input, details, the address details, the contact details would be automatically pre-filled. Then the OTP would be sent and the ID would be created. Then log in to that respective ID using the email ID and password. go to log into the portal, go to MCS services, FO services are there, and then associate the digital signature. How to affix, which we have discussed, that once it is submitted, the SRN number would be displayed on the My Application tab. You download the form, affix digital signature, upload, and then make the payment. This is the same thing. And this is just for ease of reference. It is there in the PPT. I will not discuss in detail. The list of forms which are basically available for LLPs, which are now being digitized. So what is the purpose of the form and what is the number? So this can be viewed on the this presentation itself. So this is about the LLP and how and what changes have taken place. Very briefly, I have tried to cover comprehensively as much as possible the existing part as well as the amendment, the comparison. I hope this session has been useful to us as professionals, and I am open to any queries and thanking you. Hanji sir. Ji sir. Yes, yes. Hanji. Currently, it is not there. It is proposed, so that NFRA has been empowered. So we may have it. Currently, there is no specific format. Hmm. Now, regarding the question of filing of whether the already LLP has been converted to private limited, will we require to file the forms for the LLP? No, with effect from that date, then the respective entity which is there would be filed. So as on the date of filing, what entity is there, accordingly the rule will become applicable. The cutoff date would be this date of incorporation. The COI mentions the date. So with effect from that date, the changed entity. That is how. Sir, you had yes. No, in the amendment there is no change. So that like in normal how it is applicable to this IBC process and all, that same process would become applicable. Even for striking of the name of LLP, there is no change. Only the thing is that the web forms, instead of the offline PDF forms, now the web portal is there. So all affidavits, declarations have to be on this web portal. Yes, sir.
Sir, while registering private limited company,
yes.
Likewise, the LLP also will get the SCCPF.
Currently, that is not being provided. Only the PAN and TAN has been made available. As on date, PAN and TAN is made available. We don't know. We may.
So in case of newly startup companies, so even the shut these numbers.
No, that is not required. That is made available as a ease of doing business, but you can very well, like, it's not a compulsory this thing to make all the compliances. That the respective rules will become applicable.
Okay. So there is no need to file the returns and
Not. Covered by this limited. So for the under the income tax, there are rules by which partners also can be made applicable. So there are provisions which are separate under the income tax and GST laws. So accordingly, yeah, there are enabling provisions there in respective acts. Government. Other like financial liabilities with creditors and yes. Winding up. Hanji.
more than 25 lakhs already is applicable.
Yes.
So this contribution includes current capital and fixed capital both, or
the ideally it should be both, because the working capital is like I mean, it is a part of this contribution which is like fixed as well as this. So ideally it should be both as an abundant precaution, both. Otherwise, then in case of we may receive some like the show cause or with this under the e-adjudication. So that care has to be taken.
Thank you, Rajbhai. So with these presentations, I think what we understood is basically it was more on the theoretical and procedural part. But being a professional, being a practicing chartered accountants, we realized that the way the LLP is getting the recognition, the government is also realized that importance. Because of that reason only this much of amendments now they have come up with. And sir, you are very well covered with each and every provisions. You are discussing these related case studies also. So you enlightened us with all the related important changes with the case studies. So thank you very much, Rajbhai. So with a round of applause, we thank Raj Kapadia for enlightening us on very important provisions on the LLP. Thank you very much for accepting our invitations. And on behalf of JP Nagar, we perform a hearty vote of thanks. Thank you, members.